Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio above the iconic trading floor. Well, as we start the trading day on Wall Street, investors are preparing for a ramp up of earnings reports from corporate America. In fact, this week, about a fifth of the S&P 500 is set to report results. We've seen about 14% of the broad market index report earnings so far, and about 70% of them beating earnings expectations. Well, the Dow Jones Industrial Average snapped a three-day winning streak yesterday. However, the major indexes are still right near record highs. And earnings today from NYSE-listed companies like 3M, Boeing, General Motors, and Lockheed Martin will give us a better sense of the overall health of corporate America. Well, with that, let's take a look at what is on tap in today's show. After the bull market recently turned two, I'll speak with the chief market strategist at Ritholtz Wealth Management about how much equities can keep climbing from here. Plus, athlete investing platform Vestable is going to join my colleague Trinity Chavez in studio as college football season enters week 9 and the NFL starts week 8. Finally, Spanish bank chair Ana Botín of Santander rang the closing bell yesterday to celebrate its U.S. launch of Open Bank. We'll hear from her and Santander partner, professional golfer John Rahm. I'm sure you know him. But first, as we await the first trade, let's turn back here to markets, of course. And joining me in studio is Callie Cox, Chief Market Strategist at Ritholtz Wealth Management. Callie, it's great to have you on the show. Good morning.
Yeah, it's great to be here, ready to talk markets.
Okay, so let's do it. We see stocks right near record highs. I know you've got a lot of fact and figures to share with us here, but we're seeing a bit of a pause these past few days based on where stocks are set to open today, too. What should we make of that?
Yeah, so it looks like we're going to get day 2 of losses. Of course, it's early, so there's a lot of time to go. But, we haven't seen a big pullback in a while. And it's kind of funny because in July and August, expectations were quite high, and then we were caught off sides by the implosion of the yen carry trade and some disappointing economic data. So right now, it seems like expectations were abnormally low. Stocks haven't had trouble hurdling that, or more importantly, corporate America and economic data haven't had trouble hurdling that. So yeah, we're seeing a second straight slide. I wouldn't get too worked up about it. I think expectations are still quite low, and there are a lot of reasons to be optimistic.
Let's talk about some of those reasons to be optimistic. What would you call them?
Well, first of all, the economy. The economy looks okay, but related to expectations, it looks pretty darn good. I mean, again, in July and August, we got jobs data that made everybody think that we were on the edge of a recession, and it turns out that's not true. There's still a lot of value in this market, especially outside of tech and rate-sensitive sectors like consumer staples and real estate. Those are two that come to mind. And corporate America just keeps knocking the skin off the ball, really. Earnings estimates were actually quite low going into this earnings season. Wall Street expected, about 3% earnings growth year over year. And that, frankly, was way too low. And now we're seeing an 80% beat rate for earnings so far. So earnings are the focus, Kristen. But, I think estimates have gotten way too low, and that can be good for the market.
And I think now we're looking at earnings growth here for this third quarter reporting season of about 4% or higher, right?
Yeah, it was 3% at the beginning. It seems like analysts are ratcheting up those estimates, not by too much, but they're definitely moving higher. And over the past 3 quarters, we've seen earnings beat estimates by an average of 4 percentage points. So I wouldn't be surprised to see those estimates move even higher as we go throughout the season.
Interesting. So the S&P 500, I took a look early this morning, up 38% in the past 12 months. Impressive.
Very.
And on top of that, up more than 60% since the bull market started 2 years ago. Do you think it's too late for investors to take advantage of this bull run?
No, and in fact, I think it's a risk if you're sitting out this market. Nobody ever thinks about the upside risk, what you miss if you doubt a rally and you don't actually buy in.
Right.
I mean, this bull has been riding on the wave of doubt and skepticism. Recession calls, worries about inflation. The bull has been able to overcome all of them. And it hasn't been this wide bull that we've seen in past, in historical bulls. Typically you think that stocks, kind of rise together. That hasn't been the case. And I think that's actually a good thing. I'm cup half full on that. If we see the economy stay afloat with lower interest rates, we could see small caps and rate-sensitive sectors continue to participate and maybe push us another leg higher.
How should investors think about potentially reallocating their portfolios in this environment?
Well, that's the thing. And I say now is a good time to prepare for a recession. That doesn't mean I'm pessimistic. That doesn't mean doom is right around the corner. But with the 10-year above 4%, around 4.15 right now, treasuries look especially cheap. And if you believe that the economy is slowing, it's probably good to start preparing, because in recessions, typically we see a 20 to 40% sell-off in the S&P.
Right.
You want to brace yourself for that. So why not take advantage and pick up a few extra portfolio cushions right now?
Other than the 10-year yield, which of course our viewers can follow, is there any specific economic data, Callie, that is telling you that the economy is slowing?
Well, the job market. When I think about the economy, I think about the job market. 70% of US GDP is consumer spending. So I think you have to go to the job market first. Of course, when people are making money, they're going to spend it. And right now, we're seeing companies really pull back on hiring. Take the September jobs report out of the equation. That's only one report. The 3 reports before that, we saw hiring around 100K, which is unusually low. And we're getting this qualitative data from companies that says that they're kind of managing costs through attrition, which is hard if you're in the market looking for a job. If companies are hiring, you're going to stay unemployed for longer. That's usually the first step to more weakness. And I'm not saying that's coming, but at least it's a yellow flag that investors should consider.
I want to talk about rate expectations, because we know, yes, during normal times, corporate earnings do drive the path forward for the stock market, but certainly rate expectations in rising and falling interest rate environments have a pretty big impact as well. And so we've already seen a 0.5 percentage point cut by the Fed earlier this year in mid-September. 2 more 0.25 percentage point rate cuts, it seems to be the consensus that we'll see before year end. Does your view match up with that?
That's the biggest question that we're thinking through right now. I think the Fed has an argument to cut gradually. I also think they have an argument to cut down to 3%. So I think the speed and degree of cuts matters a lot. I mean, right now, September jobs report was strong. The 3 jobs reports before that were not strong. The Fed is looking at the labor market because its dual mandate tells them to look at inflation and unemployment. And inflation is under control, so they're squarely focused on unemployment right now. So they're at a point where they're getting some messy jobs data. It's probably not enough to sway them one way or the other. The October jobs report is going to be messy. I expect them to keep cutting gradually because they have room to cut. And honestly, that's a great position for stocks. I mean, it's celebratory rate cuts, just adjusting policy back to normal.
Interesting. I had a guest, an economist, on just a few days ago, and he had said that he actually thinks when it's all said and done, we won't see as many rate cuts as previously forecast, because he thinks the economy is holding up quite well. How could the market react to a change in course like that?
Well, it's tricky, right? Because the job market's slowing, but it's slowing at a gradual degree. And in the past, the job market hasn't slowed at a gradual degree. We've typically seen, a mass of layoffs come really quickly, and then the Fed is on their back feet having to cut desperately, down to 0 actually in the past few cycles. So I can see his or her argument there. It's hard to say where the economy is going because we're just in such a special period. If we do see the job market fall apart, the Fed probably has an argument to cut below 3%. And then you could see the stock market fall apart a little bit. Then those portfolio cushions become all the more important.
Quickly, Callie, do you have a year-end target for the S&P? How much would we rise potentially from here?
I actually don't have a year-end target, but I'm hopeful.
Yeah.
I wouldn't be surprised to see a little bit of nervousness around the election.
Yeah.
But overall, there are still a lot of reasons to be invested.
Okay, good. Callie's going to stick with us for our viewers watching, of course. Throughout the show, we're going to check back in with Callie Cox here on set with me in studio closer to 9:30 a.m. Eastern as we await that market open. But meanwhile, stay with us, because up next, Vestibule co-founder and former college football player Parker Graham is going to show us how fans can invest in the career trajectories of athletes.
From automotive to climate tech and electronics, 3M is working to build a better tomorrow through innovative solutions and first-in-class material science. We're going to find out how on this episode of Taking Stock. You're here at CES, CES. I mean, this installation is incredible. Let's talk about some of the most exciting products you're showcasing.
3M, at our heart, we're a material science company, and what we're showing here at CES is how we're actively building for tomorrow with our inventions, with our technology.
You've been working together with 3M for about 4 years now. You've been building this product that you're debuting here at CES. Let's talk about it.
So this is the world's first self-powered hearing protector. This hearing protector has my solar cell here on the top. This will allow you to harvest any light, indoor light, outdoor light, shade, when it's dusty, all kinds of lights,
Wow.
and charge the battery. This means we're saving, together with 3M, millions and millions of batteries over the lifetime of the product.
Now, as a customer of 3M, let's talk about the products that you utilize most.
What we do with Voltaire is that we develop solar panels with application in agriculture.
These right
Like
here?
the one
Okay.
here, exactly. In the agricultural sector, light is very important for the crops to grow. If you take away light, you're going to take away some of the yield of the crops. What we do with 3M and the way we partner with 3M is that we develop a solar solution specifically tailored for the needs of the crops. So we use the filter from 3M to separate the light coming from the sun. The part of the light that is necessary for the growth of the crops goes through. What is not used by photosynthesis is taken out and transformed into renewable energy. It's an entirely new opportunity of how to approach energy in the agricultural space.
Wow, so it's really making the world a better place.
Hopefully, yes.
What are you most excited about this year?
Changing the narrative in people's minds about what 3M is as a company.
Good morning and welcome back to NYSE TV Live. Well, as college football enters week 9 and NIL earnings pick up steam, have you ever thought about how you might be able to invest in athletes? Well, a new platform is aiming to give you that option. I want to bring in my colleague, Trinity Chavez, who's going to be joined in studio by a guest on this very topic. Trinity, good morning.
That's right, Kristen. And we are going to get to that interview in just a moment. But first, I want to share a few points. So just over 2 years ago, the NFL kicked off its Global Markets program designed to build a fan base and grow awareness beyond U.S. borders. And it's paying off. In fact, the number of international games will jump from 4 this season to 8 by 2025. It highlights a key point, well, sports, especially the NFL. It's a big business. Sure, baseball may have been called America's pastime, but when it comes to earnings, the NFL far surpasses Major League Baseball by about 40%. The major streaming platforms have taken notice too, racing to unlock this exclusive rights to games. Well, Netflix shelled out $150 million to air 2 games this Christmas, and Amazon secured the rights to all Thursday night games for a whopping $1 billion. But how can the average investor get in on all this action? Well, now you can own a piece of the game. I'm joined now with Parker Graham. He is the co-founder of Vestibule to find out all of this and more. Thank you so much for joining us on the show today, Parker.
Thank you, Trinity, for having me.
So let's talk about, first and foremost, how is NIL really changing the game?
Absolutely. NIL has created this pathway for athletes to fully, really get access to the full value of their brand and who they are as athletes. When I was playing college and pro football, you'd look up in the stands and people would be wearing your jersey number, but college athletes weren't able to actually monetize that, right, and be paid for doing so. Now, the game's completely changed to the point that college sports are probably never going to be the same again.
And talk to me about how investors now can go about investing in not only the sport, but the player itself.
Absolutely. So that happens in actually a lot of ways. So on our platform on Vestibule, you're actually able to invest in a stock where we partnered with the athlete, created a company around them, and not only are you able to invest in that athlete's career, but you're able to actually be paid for doing so. They pay a distribution to their investors every single month. We launched our first athlete, and now we're going to number 2, number 3, number 4.
Yeah, I do want to talk about that. So you recently completed your first athlete IPO with Baron Browning from the Denver Broncos, raising $657,000. That's a huge milestone. Talk to me about the strategic business model behind that move and how it's been received.
Absolutely. It's something that we've always talked about as sports fans, right? I mean, you've probably been sitting down with your friends watching a game thinking, oh my gosh, that athlete, if you just would have invested in their career at some point, you'd be worth a lot of money. We actually wanted to be the ones to put that into practice. And so this first guy that we worked with, Baron, is an innovative guy. He wanted to be the first one, and now that his IPO is complete, we're not just going to be talking about doing deals under $1 million, but now it's going to allow us to move to $1 million, $5 million, $10 million with the next couple athletes we have coming out.
So investors are already making, earning dividends through this transaction.
Absolutely, yeah. They're getting paid every single time a check hits for Barron. It's so fun that investors are actually making a piece of that check as well directly from the Broncos.
And I do want to talk about how you received approval from both the SEC and FINRA to offer athlete securities. I believe this is the first time that this has happened.
This has. So there's been a lot of companies that have come and tried to do it before in different ways, whether it's private placements or Reg D. We were the first ones to use Reg A, which is a specific filing process, to allow not only to do an IPO with an athlete, but also do secondaries as well. So you're able to trade in and out of those positions at scale.
Can you talk more broadly about what this regulatory approval means for both from an investor standpoint, but also for the athletes?
It's really important because it's protecting the investor and protecting the actual security that we create with the athlete, right? Investors are protected because they're investing in a brokerage account. So just like they're investing on Robinhood, right, into different entities, you're going to be able to do the exact same thing, but as opposed to Google, Apple, and Facebook, you're going to be investing in hopefully the next Pat Mahomes, the next Travis Kelce, and so forth.
So how do you think that this is really going to shape the future of investing when it comes to sports?
I mean, look at what's happening in the gambling market right now, right? I mean, gambling is so impactful and so powerful. People are doing that every single day. But unfortunately, you lose 99% of the time, right? For us, we think that we can ride right alongside gambling and be really the smarter decision where you're able to put your money and let it grow over time versus that immediate gratification.
Can you talk to me more about the impacts when it comes to the private equity side and how it's really going to impact NFL teams more broadly and the potential ramifications of this?
Absolutely. So as most people know now, the NFL is allowing private equity to come in and own portions of these franchises. Well, why is it actually happening? It's because the NFL owners want to monetize that business model, right? And private equity has got a 5x and 10x the return. So that ultimately means that the NFL, even though it's the biggest thing ever right now in sports, it's only going to get bigger, and no one can access it except rich people for the NFL franchises. We're giving people access to do it with the actual people that actually play the sport.
But long term, though, how do you plan to sustain this, right? Because as you scale up, as you grow bigger, I mean, you're going to encounter new challenges. So talk to me about your business strategy over the next 3 to 5 years.
The great part about it is if we can dominate the NFL and the NBA, there are brand new athletes coming every single year. There's 300 new NFL athletes and there's 100 new NBA athletes. So the crowd, it's really just limitless.
Yeah.
And then you can go out to the other sports. Think MMA, think tennis, golf. Really, this is where the lifeblood of America is in sports, and we're helping people get access to it in a brand new way.
What's the time frame for this? I know, obviously the NFL is priority, the NBA is priority, but talk to me about your expansion plans and what your estimated time frame is.
Really, we'd like to focus on the NFL and NBA for the first couple of years, at least 2. And if we can dominate those sports, kind of everybody else comes with it. And I think you'll see us go into more of those individual sports, right? The golf, the tennis, those ones of the world as well.
And what would you say is your major focus for the rest of the year as we enter to 2025?
Really, it's getting ready for our next 10 athletes. We've got a great, amazing group of athletes that we're working with right now. We're just excited to share it with the world, and it's going to be coming very, very soon.
And you're going to come here on NYSE
With
TV
Trinity,
Live to announce it on our show, right?
Yes, ma'am.
Well, thank you so much, Parker, for joining us today. A lot of key takeaways.
Thank you for having us.
Absolutely. Now I am going to send things back over to my colleague, Kristen Scholler in Studio One. Kristen?
A stock with a dividend, Trinity. I like it very much. Thanks to Trinity Chavez and the co-founder of Vestibule for that interview. We are going to take a quick break, though, but stay with us because on the other side, one energy service provider has major news as of this morning, and we'll give it to you on NYSE TV Live.
So, Carla, it's Climate Week. Tell me, how's it been going? Do you have any key takeaways?
Yes, I've really been enjoying Climate Week. It's such a rare opportunity to get everyone from around the world together to think and talk about climate change. So one big takeaway for me is that there are more technologies than ever to help us better measure greenhouse gases, monitor, as well as reduce emissions. And AI is actually enabling those technologies to do even more and to lead to more productivity. One of my other takeaways is that common policies and approaches really do help. And so it's been nice to think globally, but also act locally.
Now, Carla, tell me about PG&E's climate goals and what's unique about the role a utility like PG&E can play in addressing climate change.
Well, PG&E is committed to having a net zero carbon energy system across our electricity and gas system by 2040. And in order to do that, we've made some commitments through 2030. So by 2030, we'll have reduced our Scope 1 and 2 emissions by 50%, our Scope 3 emissions by 25%. And we're also focused on helping our customers reduce their greenhouse gas footprint through energy efficiency and electric vehicles. And what's unique about a utility doing this work is that we're going to fuel decarbonization. So it's our role to make sure that the grid is ready for all the EVs, for the electric buildings. And I'm really proud that recently, in a recent decarbonization ranking, PG&E was ranked #1 utility in terms of our decarbonization efforts.
Now, accelerating electric vehicle adoption is a big priority for PG&E. Can you share why and what steps you're taking?
Well, reducing greenhouse gas emissions in the transportation sector is key. 40% of California's emissions come from transportation, and 1 in 7 electric vehicles in the country is in our service area. We also know that the more EVs we have on the road, that increased load helps lower the price of electricity for everyone. So we're focused in a couple of areas, preparing.
Welcome back to NYSE TV Live. I'm Kristen Scholler. Well, as ESG becomes a greater focus for good and investing, one company is leaning into that strategy. Redaptive, an energy service provider, this morning announced that it secured a $100 million stock investment from the Canada Pension Plan Investment Board, or CPP. Well, as the company looks to decarbonize at scale, its CEO joined the NYSE's Judy Shaw with more. Let's take a look.
Our mission is to decarbonize buildings at scale for large commercial industrial clients. So imagine you're a global head of real estate and you have 1,000 buildings across the country. Decarbonizing them requires electrical upgrades, mechanical upgrades, and we're helping them do that at scale by providing the data and the measurement for the ESG outcome and an access to a marketplace of partners, this ecosystem that includes electrical and mechanical contractors that are doing work every single day in facilities, in buildings, nationally, and enabling them to do more so we can decarbonize buildings at scale.
Exciting news today. Congratulations are in order. You've secured an additional $100 million from the Canada Pension Plan Investment Board. So tell me, how will you use this investment to drive Redaptive's growth and enhance your service offerings?
We're planning on using the investment in multiple ways. One is to continue to democratize access to energy efficiency. We're giving them the tools to drive the outcomes that are needed at scale. We're orienting to become a technology-first company. We're going to enable technology at scale through these processes to drive volume of efficiency retrofits at these buildings. And providing that technology for every single one of our partners in the ecosystem so we can be the lighting, electrical, mechanical contractor's best friend in them doing more at scale.
So Arvind, tell me, who are your customers and how are you helping them achieve their net zero goals?
Our customers are a variety of Fortune 500 companies. We primarily have a lot of customers in healthcare, industrials, manufacturing. So they have national footprints, sometimes international footprints. We're focused on them and it's not their core business necessarily. So our core business is to make these buildings more sustainable for them, and that's what we're focused on.
And finally, Arvind, as we look ahead to 2025, what are the key priorities for Redaptive?
The key priorities include, we're focusing on our customers, enhancing our offerings to provide more tailor-made efficiency solutions. Energy consumption is going through the roof. So the need for efficiency is greater than ever before. And so that's what we're focusing on, doubling down on how we drive efficiency for these buildings, reduce the consumption. So to get these assets in more efficiently, it requires a completely different orientation with technology being first. And we know that that's a big part of our roadmap, a big focus area, and that's kind of the primary focus for us in 2025 is to make that shift into a technology-first organization, focus on our customers, drive more efficiency for them, and then focus on the ecosystem of partners. We want everyone in the industry to be able to do things differently.
That was Redaptive's CEO and the NYSE's Judy Shaw with more on how the energy service provider is aiming to democratize access to energy efficiency at scale. Well, let's take a look here at what we are expecting in today's session. Of course, earnings season picking up. I'm going to be checking in with Trinity Chavez down on the floor momentarily, heading into the opening bell. But big NYSE listed companies this week, like General Motors, Boeing, Lockheed Martin, all set to report earnings as, by and large, most companies have been exceeding expectations. We heard that from our markets expert earlier, Callie Cox. She's going to rejoin me after the opening bell to make sense of this market. But we're currently setting up for just a fractionally lower open, stocks taking a pause after what has been a very strong run. I do want to bring in Trinity Chavez now with more on the floor as we await that opening bell of LATAM Airlines. Trinity, what is the pulse on the floor?
So right now, the floor, there's a lot of action right now as the traders get ready to open up the U.S. equity markets. As you said, the market is, it's looking fractionally lower right now. But, we are welcoming LATAM Airlines Group S.A, ticker symbol LTM, back to the podium this morning in celebration of its recent relisting on the New York Stock Exchange. So just to give you all a little bit of, more background on LATAM, it is the leading passenger and cargo airline group in South America, serving as a critical transportation hub for the region. And following this morning's celebration, LATAM will be hosting its Investor Day in Siebert Hall, which is located on the 6th floor of this iconic institution. And I told you there's a lot of action transpiring here on the floor because it is an active trading floor. About 200 traders right now are placing in their orders that have come in overnight as we get ready to open up the U.S. equity markets. But back to their Investor Day, it's going to be hosted later on today in Siebert Hall, which is on the 6th floor of this iconic institution. They're going to be discussing their future strategy and growth plans. And it's also worth noting that NYSE-listed Delta Airlines also holds a 10% stake in LATAM, while the Cueto family is one of Chile's prominent business families, owns about 5% of the company. And, here at the NYSE, Kristen, we are a proud home to list 97 companies from Latin America, 7 of which hail from Chile, including LATAM Airlines. So new listings from the region this year include Auna, which is a Peruvian company, and Tiendas 3B from Mexico, both of whom IPO'd with us just recently, earlier this year, in fact. So we've also seen companies like Betterware from Mexico and Logistics Properties from Costa Rica. They transferred their listings here to the New York Stock Exchange. So once again, congratulations to LATAM Airlines on their relisting here at the NYSE and their continued success. So, Kristen, it looks like we're just about 2.5 minutes out from opening up the U.S. equity markets. The action is unfolding right behind me. We're going to be seeing members of the executive team from LATAM Airlines just fill the floor as they get ready to make their way down to the trading floor. And if we can, I'd like to get some images of the Bell Podium. Well, right underneath the Bell Podium, where we're going to see that team sign the Distinguished Guest Book alongside names like The Rock, Dwayne "The Rock" Johnson, who was just here not too long ago with TKO. So many entrepreneurs, world leaders, industry disruptors who have walked through the very doors of this 232-year-old iconic institution. They have etched their names in that book. So, again, it's an exciting day here at the New York Stock Exchange, and we have a lot to get to.
Trinity, that's exactly right. And it's great to see the crowd down there. Of course, the stock exchange welcoming guests and visitors from all around the world, certainly today, to celebrate the LATAM Airlines secondary offering and Investor Day. Also recently with International Day, which I know we're going to talk about here in the second half of the show. But as we prepare for this market open, the major storylines driving stocks and thus the investing community continues to be earnings, Fed interest rate policy, and a bit about the election. Of course, the election is going to be here before we know it, just about 2 weeks away, roughly. But of course, we know stocks historically do perform well during election years. Trinity, I know that you were able to speak to some of those companies when they came here for International Day.
Yes.
Any other takeaways that you've had from this particular region and some of the companies that you've spoken to?
Yeah, Kristen, they were just saying how significant it was to come to the epicenter of global financial markets, to really come here and have these discussions talking about our world economy and the impacts that their sectors are having on it. Different innovative ideas, technologies, especially with the rapid development of AI, Gen AI. So many businesses right now are moving to the cloud. And so it's what those topics are at the forefront of those conversations that they chose to come here to the New York Stock Exchange to meet, convene, congregate, and network. And that took place here because it happens here at the New York Stock Exchange. But I do want to point out that we're about 30 seconds from going out to the opening bell again. The traders right behind me gathering, getting in those last minute orders, and everything's looking intense. But again, There's a little bit of uncertainty ahead of the election, but all in all, we're still close to those record highs, Kristen, that we've been talking so much on the show about. But I think that we should tune into the opening bell, and then I'll join you back on the floor in just a little bit.
Let's take a listen as LATAM Airlines celebrates the open. All right, we are officially off to the races with the stock market open here at the New York Stock Exchange. And to talk all about it, as we are right near those record highs, I'm now rejoined by Callie Cox. She's a Chief Market Strategist at Ritholtz Wealth Management. Callie, it's great to have you back on the show here with me. And I want to talk a bit more about some of these sectors, right? So you and I have been talking earlier in the show about earnings, how that is driving the stock market, and historically has, of course, over the life of the stock market. We're really picking up steam into peak earnings week next week and the following week when we get some of these technology results. How should our viewers be looking at some of these high-flying, richly valued tech names?
Well, first of all, going back to expectations, it's all about expectations. So tech is one of the sectors that's expected to show pretty robust earnings growth, but the bar is quite high. I think earnings estimates call for a 15 to 16% rise in profits, which is high, right? If you consider that the S&P's profits will probably grow between 3 and 10%, pretty high. So tech is almost a victim of its own success these days. The big tech is pretty richly valued. It was more of a trade when higher interest rates were, more of a consideration. Now the Fed is cutting. So, I mean, if you're an investor looking out long term, I probably wouldn't freak out too much if, we saw a sell-off for big tech on their earnings reports. But, I mean, remember, the story is compelling. If you're optimistic about tech looking years out, then it might be a good time to buy on some earnings report weakness.
At this moment in time, as you look at the market as a whole, some of these dividend payers, we were talking about athlete stocks with dividends. Of course, you can't invest in those in the public markets at the moment, we should say. But how do some of the dividend players look to you, even the small caps, maybe some of these sectors that were not as loved during the first 2 years of the bull market?
Well, dividend stocks are interesting because you're right. I mean, they're valued because they pay out this consistent income. But the S&P's dividend yield has been below inflation for so long, and I think just now it's starting to cross over, which means dividends are attractive again. And that's one of those areas of the market where there is some value left because they've been largely ignored in most of this bull market. I would throw small caps in there too, although small caps are less of a dividend play. So dividend stocks becoming attractive right now, especially if the economy stays afloat, because a lot of those dividend stocks are the steady performers with consistent income. They have to pay a dividend somehow. Small caps definitely there, although small caps are a bigger mix of unprofitable stocks. Small caps that are small for a reason, and then other small businesses that choose to be small or operate in different niches.
The housing market is such a key focus, and tomorrow we'll get existing home sales data, new home sales, I do believe, coming actually on Thursday. Rates factor into that equation as well, of course, when it comes to a mortgage. What do investors and Americans need to weigh right now when it comes to that decision of whether or not to buy a home?
Yeah, well, housing affordability is one of the toughest conversations to have right now. Mortgage rates are still around 6 to 7%, nowhere near where they were in the 2010s, and we've seen prices just steadily increase since the 20s, since really the pandemic began. So I'm a pretty optimistic person. I even think that this dynamic is quite tough. The Fed is cutting rates, but there's not a guarantee that we're going to see much lower mortgage rates in the future, especially if the Fed gradually cuts, if the economy stays afloat. That's great for your job. That's great for the stock market. That's not great for housing affordability.
Yeah. And in terms of some of these housing stocks, I'm not sure how closely you might follow the sector, but do we see similar storylines playing out in the market?
Yeah, well, home builders have done really well this year, and I think part of that is on the back of the Fed cutting rates in hopes that the housing market will reignite. You know, if you think mortgage rates aren't going to go down that much, then maybe that story is a bit inflated. I certainly fall into that camp, but I do think real estate is quite interesting because if you think about real estate, it's a mix of things in the stock market. It's home builders, it's commercial real estate, it's residential real estate, REITs, which is a mix of all of those. So, you know, I think real estate in general has gotten hit too hard, and there could be some left in the tank because of the lower rate play. But I think you have to be careful, right? And if you're buying into real estate, I think you have to look at a basket of stocks, not necessarily picking and choosing.
Callie, what else is on your radar here as we approach the peak earnings season?
Well, the election.
Yes.
I get a lot of questions about the election.
Which just so happens to coincide with the peak earnings season this year.
Yeah, and the Fed meeting and a pretty pivotal jobs report. So it's going to be a busy week.
Yeah.
We are getting a lot of questions about the election. We're telling our clients that in the long run, very generally, politics don't matter for your portfolio. No single person can control a $57 trillion stock market. Mm-hmm. Of course, that's hard when the conversation is so loud and emotions run so high. So we try to, you know, tell each client to look at their own financial situation, look at their tax and estate planning, consider what some changes in tax policy could mean for their situation, and most importantly, talk to their advisor or get online and learn more about what it could mean for you, not necessarily what it could mean for the stock market.
Just very quickly, Callie, in about 20 seconds time, this jobs report that we get here soon could be impacted by weather events. Do you expect that to take a toll?
Weather events and strikes.
Yeah.
I think it's going to be a messy report, even though the market's going to pick it apart.
Okay. We will be picking that apart here on NYSE TV Live. Callie Cox, thank you so much for joining.
Yeah, thanks for having me.
All right, well, stay with us, everyone, because up next, we are going to take a look more into the LATAM market as well as a key bell ringer yesterday, Santander.
I know you have a big event coming up. We'll get to that in a moment. But for those that are listening in who maybe aren't following ETF Express as closely as I am, could you tell us a little bit about yourselves?
Thank you so much. So ETF Express was founded in 2006. So it's been going a really long time. And that was in England. But we are a global title. We've been writing about ETF launches and interviewing managers and issuers and service providers around the world since 2006. We launched awards in Europe in 2010, and we have an unusual method of organizing our awards. We're not pay to play. We have a qualitative and a quantitative screen for our awards. So if you're an issuer, you get to be nominated by our data partners, Track Insight, and then you go through a voting process from your peers. And if you're a service provider, you can nominate yourselves, but then you equally go through a voting process from peers. So it's not pay to play, and it's not sort of going into a dark room and with a committee and coming out with a random, obviously strong, but ours is voting. We like that. The firms with the most votes win. So we've been doing them in Europe since 2010, and then we launched them in the US in 2019. And then, of course, we had a couple of years where we did them from home, which was, an interesting experience, but not the same. And then we added in Canada in 23, and we're very much hoping to expand into Asia next year. And if you win an award, you get to come to our party, which is the awards event. And our one for the US this year will be on the 24th of October. If you don't know about it, I'm sorry, it means you haven't won one. But also, you're sworn to secrecy. So there's this kind of, tricky thing there. Tricky not to.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler, and we are officially open for trade down on that trading floor. Let's take a moment to check in with Trinity Chavez amid all the action. Trinity, what's going on?
I mean, there's a lot of action unraveling here on the trading floor, Chris. I mean, just look behind me. So right now, these are members and employees of LATAM Airlines. They are utilizing this Bell podium and where the distinguished guest book sits for every photo opportunity, just celebrating the relisting here of LATAM Airlines here at the New York Stock Exchange. About 200 people right now are on the trading floor, just sort of dispersing in little different pockets as they continue the celebration of today's festivities. And before the Investor Day convenes on Siebert Hall on the 6th floor here at the New York Stock Exchange. But I was talking to some of the people in the audience and they were just elated. They have come all the way from Latin America just to be here for the celebration of LATAM Airlines. Also, many of the shareholders and investors who work with LATAM Airlines are here for the Investor Day. They were also in the crowd just talking about what a monumental moment this is for the company and how they are so excited to talk about these things and their business strategy moving forward to continue this growth of LATAM Airlines. And again, if you look behind me, I mean, there's just nothing but smiling faces here on the trading floor this morning. It's such a great morning. And then just right here again, these are some of the shareholders, a part of LATAM Airlines, just utilizing every opportunity here to captivate this moment right underneath the Bell podium, because this is really just, you know, such an exciting moment. They're relisting here at the New York Stock Exchange, joining once again, over 2,400 listed companies that are here at the NYSE.
Trinity, an $8 billion company, I see, of course, focused in Brazil. Great to get that color down there on the floor of the stock exchange. And as we talk really about the international reach that we see here and presence at the stock exchange, we know that Santander, key Spanish bank, was here yesterday to celebrate the launch of its new U.S. digital bank called Open Bank. Executive Chair of Santander, Ana Botín, and Spanish professional golfer Jon Rahm joined NYSE TV to talk about the value proposition for consumers, including a high-yield savings account tied to this new digital bank offering here in America. Let's take a look.
So Open Bank is today the largest digital bank in Europe by deposits. It is a digital-only bank that we have built our own tech stack over the last 8-9 years. And it's an important milestone because we are launching Open Bank nationwide across the United States with what I believe will be the best high-yield savings account in America. Fast and simple, very competitive rate, but very important, backed by the trust of the 168 million customers that bank with Santander today.
Santander, of course, a publicly traded bank stock, international presence as well, as Anna was mentioning, more than $78 billion in value. And Open Bank is a full-service digital bank that Anna said is aiming to capture young consumers so that those relationships really can grow over time, so that these customers stay sticky with the bank. Let's take a look at what Anna had to say.
Open Bank was a brand that has worked very well in Europe. We tested in the United States, and Open Bank resonates much more with the younger generation. Even though we're starting with what I call the best high-yield savings account in America, we do aim to deliver full-service banking, so current accounts, credit, debit cards, payments. We have an AI-powered broker that we'll also be implementing over the course of 25. So we're aiming for a full customer relationship, and it's young people that deliver those long-term customer relationships.
An impressive 5+ yield on that high-yield savings account, according to Anna. That's what she had told me off camera. But she was joined by professional golfer Jon Rahm, who shared his love of the sport with Santander's chair, Ana Botín, as you were just hearing from. Jon Rahm is part of this U.S. launch. He went to school here in America at Arizona State University, based in Tempe. And here's what Jon had to say about being part of this campaign.
Santander has a long history with the game of golf, and being a professional golfer, it's a true honor to be a part of it. And then, well, we're here at the New York Stock Exchange for the opening, the soft launch of a new online bank here in the U.S., being Open Bank.
It's great to hear from John. Of course, you can watch more of that conversation on tv.nysc.com, and we have a forthcoming podcast with both of these two individuals and golf lovers as well. All right, well, we still have a lot to cover, and I do want to bring in my colleague Trinity Chavez down on the floor. Trinity, great to hear not just from some of these key world leaders and, of course, executives of businesses, but sports superstars, very much a part of the conversation and what happens here at the stock exchange. And I know you recently actually sat down with a sports superstar as well for International Day. Who was that guest?
That's right. Brazilian world famous soccer star Ronaldinho Gaucho sat down with me here at the New York Stock Exchange in studio. But he was here for International Day, as you mentioned, to really kick off the festivities. He was the first speaker of the day, and he was talking about he was declared the face of the World Cup come 2026. And so that was obviously at the forefront of the conversations for that. But when he sat down with me, we really led the conversation by talking about his biggest motivations, the trajectory of his career, what has inspired him, the most monumental moments throughout his career, some of the biggest trials and tribulations that he faced and the challenges and how he overcame those challenges. We also talked about how he was, his life off the field since he has stopped playing soccer, and how, from an investment standpoint, how he's investing in 2 U.S. soccer leagues. They're both based actually in South Carolina, and so he's really joining that ownership and what that vantage point looks for him now, since he is now off the field, taking his business endeavors off the field. And so that was a really interesting conversation. And we also talked about his recent announcement, as I mentioned, the so-called face of the 2026 FIFA World Cup. And this is the first time that an ambassador has been named for the FIFA World Cup 2026. This is going to be taking place in Miami. And so he was talking about all the excitement around this, how the presence that he brings is going to be super beneficial for the overall soccer and sports sector as we know it. And it could open up more doors for more and more celebrities to continue to do this as they transition off the field. And we also talked about his impressive career. He had 97 caps and 33 goals, and he was represented in 2 World Cups. So that was also a topic of discussion when we sat down here at the NYSE for International Day.
He has a massive social media following at Trinity, so it's good to see him, of course, promote that trip here to the stock exchange to his hundreds of millions of followers. But I do think it has proven to be a good business model. Some of these large institutions pairing with people with big name brands, whether it's Ronaldinho, whether it's John Rahm and Santander in the case of yesterday, as we just showed our viewers, or I'm even thinking of Gwyneth Paltrow with Group. It has shown to be a positive impact. Let's take a break, and we will have more to tell you on the other side, including what market storylines are driving trade here at the stock exchange.
So Meredith, bond ETFs were created to provide easier access to fixed income markets. And over the last few years, they've helped facilitate liquidity in the bond market. So how have ETFs impacted bond pricing and liquidity?
So there's a few key elements of the ETF that I want to highlight that explain how they're additive from a liquidity perspective. So the first point is the create redeem mechanism, which allows for primary transactions. It's the hub of the wheel, and it allows for us to efficiently transfer risk. The second element of this is the price discovery vehicle, and the price discovery vehicle has led to the development of algos. The other thing to think about is that the growth of algo trading, the growth of portfolio trading, the ETFs are the hedge for that. So as we think about credit market structure, all 3 of these things will grow together. So if we look back over the last 5 years, there's been some pretty prominent shifts within the credit markets. The first is PT, portfolio trading, ETFs, and ETF options are the fastest growing segments within credit markets. The other piece that really stands out to me is portfolio trading as a percentage of cash bond markets is now about 8 to 9%. Just 5 years ago in 2020, that number was closer to 2%. If we look at ETFs from the same prism, ETFs are now, from an IG perspective, 15% of cash bond volumes. That number is up from 7% in 2020. And high yield ETFs have also shown similar growth. They're now accounting for roughly 30% of volumes. That number used to be about 20%.
So let's fast forward to today. There's been a lot of innovation in this space. How have innovations such as thematic or actively managed options altered trading strategies? And what do you see as the associated risks and rewards?
That's a great question and very topical. If I put on my ETF hat, I really think about the product evolution in ETFs in chapters. So the first chapter, there was a lot of index beta products that were offered to the market. The second chapter was...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. And one of the things that we cover quite often at the stock exchange, of course, is companies that are growing, innovating in their own realm that may eventually someday tap the capital markets here at the stock exchange through an IPO or public listing to raise money to grow their businesses even more. LATAM Airlines ringing the opening bell, a great example of that today. And my colleague Trinity Chavez is on the floor with more about a potential prospect here at the stock exchange, specifically in the space of cloud security. Trinity, what can you tell us?
That's right, Kristen. So I recently sat down with the CTO and co-founder of Wiz. They had a major new product announcement as well as hitting the $1 billion mark. So let's take a look at that video and then I'll meet you back here on the floor.
So Wiz is a cloud security company. What we're trying to do is to reimagine how security should be done for cloud.
So Wiz was founded in 2020, and according to your company, it was the fastest growing company to reach $100 million in ARR in just 18 months. Now, you reached $1 billion earlier this year, and you have previously stated that you had the intent to IPO once you hit that $1 billion milestone. So where do you stand now? And talk to me about what you think is driving this success.
Everything is moving to cloud. The workload, the data is moving to cloud. Now that we have the AI revolution is actually happening in the cloud. So as we move everything to cloud, the key question that CISOs have, CIOs, even the board, is how am I securing my data in the cloud? Because that's where attackers are going to come to. And we are in a fortunate position where we can actually help security teams modernize the way they do security to be ready for the cloud and AI revolution.
So where do you stand now?
Honestly, for us, it's unbelievable to see the impact that we can have on companies that we work with. And we are very excited towards that journey, as you said. I mean, this is, for us, every time to see the steps that we make, that the products that we launch, the ability for us to help more customers is basically another milestone in the maturity of the company.
And speaking of new products and achieving new milestones, talk to me about Wiz Code and why this is so significant for Wiz.
But Wiz from the beginning was always actually centered on having developers and people outside of the security team actually fix the security issues. From the beginning, more than 50% of the users of Wiz are actually outside of security organization. And this goes back to the fundamental change that we're trying to drive in security, which is a change towards self-service. Because the cloud changes everything. You can build in the cloud without the help of anyone else. The engineer can build anything they want in a speed they could never do before. Security needs to change. It needs to adapt. It needs to be easy for the developer to actually fix. And what Wiz is trying to do, and Wiz Code is just another step in that revolution, is to make security easy to use, to make security self-service, where every team can own the security of the things that they build.
You work with around 40% of the Fortune 100 companies, as well as some of the fastest growing born in the cloud companies. So talk to me about who uses Wiz's platform.
The security organization wants to help the business grow, wants to help the business use the cloud faster, but they need to modernize the approach to security. They might have so many different teams using different tools. They need to break those silos, build a tool that understands all the cloud, all of the stack, right? And is able to show the engineer, what do they have to do today to get to be more secure? This revolution is something that every CISO has on its mind. How can I enable my business, adopt cloud, adopt AI, but still not actually risk my business? And that's where we try to come and help.
What are some of the biggest trends right now that you are seeing in the cybersecurity landscape?
So it all goes back to, I want to consume more cloud or I want to consume more AI services. How do I consume more AI services? I have to use them in the cloud. And then the discussion becomes, okay, what about AI security? What about cloud security? But actually always it's the same, right? How do we create a plan for our applications teams, for the business teams to adopt the new technologies without risking their business?
And you're here at the New York Stock Exchange for your event. Talk to me about this event and why it was important for you to have it here.
So this is the Hall of Fame of innovation. I mean, just seeing the companies that were founded here, that are listed here is just amazing. These are generational companies that changed the world of technology, and that's also the hope for Wiz to become one of those companies. So it's an honor to be here.
And we look forward to having you back. Thank you so much, Ami, for joining me today.
Thank you.
LATAM Health is the category creator for healthcare navigation, where we supply healthcare navigation for the largest self-insured employers in the country.
I want to talk about your business strategy. What would you say is your strategic focus over the next 3 to 5 years?
Our focus is really around how do we create the best healthcare experience for members, because healthcare is incredibly complex and hard. It's continuing to be complex. Our role is to take that complexity and simplify it for our members and try to create better experiences, more engagement, and drive better clinical and financial outcomes.
Tell me more about your culture and motivation at the company. What inspires you and how do you remain innovative and ahead of the curve?
Culture is everything. So you can feel it when you come into our shop. You can feel how people are warrioring on behalf of our members to get the best out of their best benefits for the members, try to create that experience that's better, take the scariness out of healthcare for them. So culture is everything. We invest heavily in our warrior culture. It's a big key element. It's probably the piece that doesn't show up on my balance sheet or income statement, but it's the most important part. And then the innovation side of this is how do we take the problems that our clients are seeing in terms of costs and try to drive those cost elements out. So we're constantly working with our clients and thinking on our own, what's the next best thing that can make a difference both from an experience, an engagement, and a financial and clinical outcome.
Can you share some real life examples of some of the work that you're proud of or
Sure.
key milestones that you've achieved?
One of the big key elements is we're seeing in our clients is pharmacy costs have gone up significantly. So you may have seen some things around GLP-1s and specialty meds. I can tell you from a pharmacy trend perspective, that is significantly hitting our clients. And so what we've been able to do is...
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. We are just about 25 minutes into the start of trade. Stocks taking a pause after what's been a very strong run, still within record high territory. I want to bring in my colleague, Trinity Chavez, on the floor with more. Trinity, a lot of action that we've seen this morning.
I mean, there's just been a lot of action that has been unfolding on the floor, Kristen. As I said, there was about 200 people for LATAM Airlines that was celebrating the relisting here at the New York Stock Exchange. Once again, joining the long list of over 2,400 companies that are listed here at the New York Stock Exchange with a total market cap of over $42 trillion. Well, around that approximation. So, I mean, again, a lot of excitement. They are now convening on the 6th floor, getting ready for that investor day that I mentioned earlier in Siebert Hall. A lot of investors, a lot of shareholders were here to support this company and just talk about the strategic growth and what's to come for this company. So again, an exciting day. We had an action-packed show, and I think we're nearing the end, Kristen.
That's exactly right. At Trinity, a reminder to our viewers as well, you can watch us live on tv.nysc.com, on the NYSE official YouTube page, and Cheddar. That'll do it for us today. Thanks for watching.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic.